What's going on, guys? Today I have another very exciting video for you. We are going to be talking about Warren Buffett and his recent 13F filings with Berkshire Hathaway. So he made a very interesting purchase in his recent 13F filings, and we're going to take a look at what that could mean for a stock like Alibaba. He specifically did not purchase Alibaba, but he purchased a stock that's kind of similar to Alibaba in a certain sense. So we're going to take a look at what that could mean. Would Warren Buffett ever buy into a stock like Alibaba, and potentially, what could that do to Alibaba stock in the future? So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. To kick off the video, basically Alibaba has been on another roller coaster ride. Right now, they were up 3.3% here today, but over the last 5 days, they had a tremendous amount of volatility. We can see here Thursday into Friday, they made a huge downward move, and then Friday into Monday made another downward move, and then had another volatile move here, and then had another volatile move to the upside here on Wednesday, and then kind of just traded sideways throughout the day. So they keep making these really interesting kind of pre-market or post-market moves, and it's just very interesting because oftentimes what you're seeing there is a lot of bigger investors, hedge funds, getting into or out of a stock. So very interesting there. Here's a very interesting website that I've used in the past, and it just breaks down. So this is Warren Buffett's 13F portfolio. So it's showing all the stocks and the percentages, shares owned, everything that's filed in the 13F in a very easy to understand method. So basically Apple, there was no change. Bank of America, you can see all the top holdings here. Chevron, Coca-Cola, Occidental, I believe this is American Express, Kraft Heinz, and then Activision Blizzard is another big one. And this is the stock that we want to get into. So this is a completely new position. You can see there that he added 60.06 million shares of this stock at a value of $4.12 billion. And what's crazy is that only makes up 1.39% of his portfolio. So absolutely insane. And they have like an average buy in there. I don't really trust the average buy. Basically, it's saying over the last quarter, this is the average price of where this stock was at. So they have $75.16. And if we scroll down, we can actually see that TSM is Taiwan Semiconductor Manufacturing. So that is the company that he added, and they are based in Taiwan. So this is a very interesting purchase because, as you can see, a lot of his portfolio, basically all of his portfolio, is US based companies. And this is obviously a foreign based company. They're based in Taiwan, and there's been a lot of interesting details out of Taiwan. Obviously, we've seen over the last year a lot of political people making visits to Taiwan, and basically a lot of kind of drama between China and Taiwan, whether Taiwan is independent from China, whether they're not, all up to for debate and politics and whatnot. We're not going to get into all that, but it's very interesting that, Warren Buffett would make a move like this into a semiconductor company like Taiwan Semiconductor Manufacturing that is in a very, potentially drama-filled environment. Let's take a quick look at TSM's chart. So right now, basically traded sideways today over the last 5 days, up 3.3%. Here's where it gets very interesting. Over the last month, they are up 33.74%. This is what we call the Warren Buffett effect. Warren Buffett buys into a stock, his 13F gets released, and that stock goes absolutely insane, like we could see here. So the stock has gone all the way from $60 up to $80, which is an absolutely insane move for a month to have 33, almost 34%. That's absolutely crazy. And what we can see here is over the last 6 months, basically the quarter that they're saying ended kind of somewhere in here, so around the $80 mark. And then Warren Buffett was buying some time in kind of this time frame. So overall, somewhere around that $75 average is what they're saying. But obviously, he could have bought down here at the bottom. He could have bought, way up here at the top. Nobody really knows exactly where his cost basis is. What's also interesting and important to note is Warren Buffett's style of investing. So he's a value investor. So he's targeting lower P ratios. And we can see here that the P ratio on the stock is a 14.91, which is a relatively good P ratio, especially compared to a lot of companies, Apple and other companies that are trading anywhere from like a 20 to a 30 P ratio. And then another thing that Warren Buffett is very well known for is targeting dividends. So this stock has a dividend yield of a 2.23%, which is relatively healthy, a pretty good dividend yield there. So obviously one thing Warren Buffett is looking at very closely is what PE ratio he's getting. So he's looking at the stock and of TSM and saying they have a forward PE ratio of 12.97. But what's very interesting is Alibaba actually trades at a lower forward PE ratio. So Alibaba here, they trade right now at a 10.06 forward PE ratio. So you're actually getting a smaller, paying less money for the same amount of earnings in terms of Alibaba stock. And the lower PE ratio is probably justified with Alibaba. The biggest thing that Warren Buffett I could see being afraid of is that Alibaba is a lot more under the Chinese government's rule. So they obviously have to abide by Chinese laws. If China wants to, fine them more or do anything, restrict their business, then they're kind of stuck. Where Taiwan is obviously kind of seen a little bit as its own independent country. The US obviously recognizes it as its own independent country. China does not. But with that, obviously, they have a little bit more freedom to kind of do what they want. The businesses have a little bit more freedom. There's a little bit better relationship with US and US based companies and the US government. So overall, it makes it probably a little bit more investable. So it makes more sense that Alibaba would trade at a lower PE ratio just due to the risks associated with it. Warren Buffett isn't one to follow someone else's stock picks, but if he did, this is the one person he pays a lot of attention to and respects their opinion a lot, and that is Charlie Munger. So Charlie Munger manages the Daily Journal's portfolio, and basically you can see here they only own 4 stocks. They own Bank of America, they own Wells Fargo, they own US Bank Corp, and they own Alibaba. And we could see that Alibaba, they have 300,000 shares, and it makes up almost 15% of their portfolio, and it has a value of $24 million. And their average buy price, very interestingly, is $172.13. So they are way above, their cost basis is way above where the market's at right now. But overall, they did have at one point double this position. They had around 600,000 shares, and since then they've tax loss harvest this year as the stock has continued to drop. But back to it, if Warren Buffett were to follow anyone's stock picks, it would be this guy, Charlie Munger. Charlie Munger obviously has faith in China, obviously sees Alibaba as a good value stock, and honestly, Warren Buffett, just from them talking about their positions, if we see Alibaba maybe start to rebound a little bit, I could see Warren Buffett, starting to become interested, especially if a lot of, again, the delisting concerns, a lot of those other concerns start to fall by the wayside. I could see Warren Buffett to gain a little bit more faith in China and basically see Alibaba as a potential investment. So with that, if we saw a similar move from Alibaba as we saw from TSM, we could see the stock move up 30%. 30% right now, however, would only get us up to around $100. I think there's a lot more catalysts that could have a very similar effect. Again, I think the delisting concern, if that goes away at the end of the year, if we see a lot of these audits come back and the SEC gives the thumbs up that that Alibaba is still good to stay listed, I think that could have a lot of positive movement on the stock. And I think a lot of those need to happen before Warren Buffett feels comfortable investing in China. There's a lot of opportunity, right? China is going through a recession, a very bad recession, especially in terms of their real estate market right now. And honestly, that is always provides a lot of value investors a good opportunity to get into a lot of stocks. And I think Warren Buffett, could potentially start seeing that with a lot of these Chinese companies, specifically, especially being Alibaba, since Charlie Munger already owns a portion of, Alibaba, a large portion of Alibaba shares. So overall, obviously don't invest into a company just because some random guy on YouTube is talking about it. Don't invest into a company just because Warren Buffett is buying into it. That's never a good plan either. You want to look over the company. You want to do your own research, look at the fundamentals. If you believe in the company and believe in its vision going forward, then obviously it could be a good buy for you. If you don't, then don't buy into the stock. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.